What's good, YouTube? It's your boy, Young Equity Chris.
And it's your boy, Young Equity Devin. Let's get it.
And today we have a very, very, very special episode for you. We're going to be talking about why we hate earnings reports. Yeah, I said it. I hate earnings reports. It just does too much to the stock price. The earnings report can be good, the stock will go down. The earnings report can be bad, the stock can go up. And it just doesn't make any sense to me, at least.
Yeah, no, I definitely agree with you, man. We have several examples of, when a stock had a great earnings report and the stock went down. I'm pretty sure you have an example of that. And you also have examples of, when the earnings report was terrible and the stock was parabolic, it shot to the moon, you know? It's crazy.
Yeah, man, like a stock that I'm heavily invested in, Plug Power, for example.
Yeah.
They always have bad earnings reports. And for the better part of a year, that stock hit the moon. But then on the other side, we have Palantir. They beat their earnings report, and their stock has been dropping ever since then. So to me, it just doesn't make sense. So a lot of times when investors, ask me a question like, hey, earnings report is coming up, is it going to be good? They're thinking like, because they believe the earnings report is going to be good, it can only mean the stock will go up. No. And even if it spikes a little bit because of the earnings report, it can still find its way back down really quickly.
Yeah, man, I had 16 shares of Apple after the split, and Apple actually had a great earnings report. They came out with their iPhone 12, the 12 Plus, and they made earnings and everything was good. News was perfect. Literally the next day, earnings, after earnings, man, the price went down. I'm like, what the heck is going on? Typically, if you have a good earnings report, the stock would go up. So now I'm under the impression that I shouldn't try to time any type of earnings, or I shouldn't think of a stock of making any type of gains after their earnings report. If anything, it's going to go down and might present an opportunity to buy.
Hey man, this is what I will say about that. If a stock has an earnings report on the horizon, I don't touch it. I'll buy it after the earnings report, and I'll live with that. Because I like a little less volatility around the time I first buy a stock. Because a lot of investing is psychological. And the worst thing that could happen to you is you buy a stock and then it drops 5% because of an earnings report, good or bad. And I can see how that could discourage a lot of investors. But what this really boils down to is this. There's a simple stock phrase that everybody knows, right? Buy the rumor, sell the news. And a lot of people do that with earnings reports. They got them on their calendar, Kramers, blasting them on the TV screen, people taking screenshots, sending them to their friends. And they're trying to time all these stocks, all these people. And that just messes with the price too much. But overall, if you're long-term investing, it doesn't bother you too much because I don't know of one earnings report that crashed the stock forever.
Yeah, no, you're absolutely right. If you look at the chart, 3-month chart, you're going to see this, right? It's going to be parabolic, right? But if you see a long-term chart, the chart goes like this, right? It's going to be a diagonal chart. So it just depends on what type of stock you're investing in. If you hold Apple, typically Apple's going to have great earnings every single period, every single quarter. It's a great stock to invest in. It has a huge market cap. They're also innovating all the time. Other stocks like that are going to continue to grow. That's why they're called growth stocks. And they've made very good strides over the years. So you just got to keep doing your dollar cost averaging, right? And stop trying to time the market with earning reports. That's it.
I mean, if you want to time the market, go for it. But timing them with earnings reports, I think, is just the worst idea ever.
Yeah.
Especially in today's day and age. I know an old school investor. He said 20 years ago, he'll buy BP right before the earnings. He knew they were going to beat it and then sell it at earnings every time. Maybe back then, when there wasn't the advent of internet, there wasn't these YouTube videos telling you to buy these stocks, where you have herds of people messing with the price of the stock. Maybe it was okay then. But now, I just will wash my hands clean of that, man.
Yeah, I definitely agree. I'm definitely not investing in a stock because of their earnings reports. Trying to time it based off their earnings reports. I definitely want to see a great earning report, but I'm not trying to make a quick buck or swing trade any stock because of that. So like I said, if you're long-term, don't even think about the earnings report being a terrible earning report, because you don't want to invest in that stock anyway, right? You want to invest in a stock that has great earnings reports every single quarter.
Yep, exactly. You're right, man. And you just made a good example about swing trading.
Yep.
As a swing trader, you you do not want to buy on the front side of an earnings report because that's how you get caught bag holding. And trust me, you do not want to hold the bag. So, again, I know we've drilled this point a million times in this video, but please don't use the earnings report as a tool on how to time stocks.
Unless you want a good buying opportunity. And we'll also talk about buying opportunities in the next couple videos.
Well, all right, guys, this is a short video giving you our thoughts on earnings reports. Thank you guys for tuning in. It's your boy, Young Equity Chris.
And it's your boy, Young Equity Devin. Let's get it.
Yes, sir.